At 6:37 in the morning, a SpaceX Dragon spacecraft docked with the International Space Station. And if you only looked at that moment, the story seemed simple. SpaceX was doing what SpaceX does best: launch the rocket, deliver the cargo, make space look boring. A few thousand pounds of science equipment, supplies, and hardware arrived safely in orbit, and somewhere on Earth, investors probably nodded and thought, yes, this is why this company is worth so much. Because this is the SpaceX story everyone understands: rockets, reusable boosters, NASA missions, Starlink satellites, Mars one day maybe, a company that turned science fiction into a launch schedule. But then, in the same week, a different story appeared. Not on a launch pad, not in a cloud of smoke, not with a rocket landing on a drone ship while the internet clapped like trained seals. It appeared in a filing, and buried inside that filing was the uncomfortable truth. SpaceX is not really being valued like a rocket company anymore. It is being valued like an AI company. Actually, worse than that. It is being valued like an AI company, a satellite company, a telecom company, a defense contractor, an orbital data center company, a Mars company, and a religion, all stacked on top of each other wearing a trench coat. And that is where things start to get weird, because the public story is still rockets, but the valuation story is no longer rockets. The valuation story is that SpaceX will become the infrastructure layer for artificial intelligence in space. That sounds insane, which in modern markets means someone has probably already made a $28 trillion slide deck about it. The old SpaceX story was easy to understand. Falcon 9 changed launch economics. Reusable boosters made rockets feel less like disposable fireworks and more like extremely expensive aircraft with commitment issues. Starlink became a real business, putting thousands of satellites into low Earth orbit and selling internet to homes, ships, aircraft, remote areas, and places where normal broadband companies looked at a map and said, absolutely not. NASA kept using SpaceX, the Pentagon paid attention, governments paid attention, and investors saw something rare: a private company with real technology, real customers, real revenue, and an almost mythological founder attached to it. That part is real. This is not some five-person startup with a landing page, three interns, and a pitch deck that says AI-powered asteroid monetization platform. SpaceX has built actual things. It has launched actual missions. It has changed the economics of actual space access. But markets are very good at taking something real and then stapling a fantasy to it until nobody can tell where the business ends and the bedtime story begins. And the numbers are where the bedtime story gets expensive. According to the filing summaries, SpaceX generated around $4.69 billion of revenue in the first quarter of 2026. That sounds impressive. Until you see the operating loss, around $1.94 billion. Then you look deeper and realize the only profitable segment was the Starlink-powered connectivity business, which produced about $1.19 billion in operating profit. That is the engine. That is the real cash machine. That is the part of the company behaving like a serious infrastructure business instead of a billionaire's whiteboard session after too much caffeine. But then there is the AI division, around $818 million in revenue, and roughly $2.47 billion in losses. That is not a small experimental project. That is not, we hired 3 machine learning engineers and gave them a snack budget. That is a capital furnace. And according to the same reporting, AI consumed about 76% of SpaceX's first quarter capital spending. Read that again slowly. The company famous for rockets is now spending the majority of its capital expenditure on AI. So when people say, SpaceX is a rocket company, that is becoming like saying Amazon is a bookstore. Technically, sure, historically, yes. But if that is your entire analysis, you're about 20 years late and probably still using MapQuest. The new SpaceX thesis works like this. Step 1, build the best launch system on Earth. Step 2, use that launch advantage to build the largest satellite network in orbit. Step 3, use that satellite network to dominate global connectivity. Step 4. Use Starship to lower the cost of putting even more infrastructure into space. Step 5. Use that infrastructure for compute, AI services, orbital data centers, direct-to-device networks, and whatever else can be placed inside a market-size estimate large enough to make investment bankers sweat through their suits. In other words, rockets are no longer the product. Rockets are the delivery truck. The product is the entire stack above Earth: connectivity, data, compute, military relevance, spectrum, AI infrastructure, and maybe, one day, Mars. The pitch is breathtaking. Earth-based AI data centers need power, cooling, land, permits, water, chips, and a local community that does not want a giant server farm cooking the neighborhood grid. Space, in theory, offers a different dream: solar energy, cold vacuum, massive orbital networks, compute clusters above the planet, data moving through satellites instead of buried fiber cables. It sounds like the future. It also sounds like the kind of thing markets love because nobody can easily prove it is wrong this quarter. That is the perfect environment for a bubble. Not because the idea is impossible, but because the valuation can run far ahead of reality while everyone argues about the future. This is how the best bubbles work. They do not start with fake ideas. They start with real technology, real progress, and real believers. Then the story expands. Then the numbers get stretched. Then investors stop asking, "What is this business worth today?" and start asking, "What if this becomes everything?" And once a company becomes everything, valuation discipline quietly gets thrown out the window like a failed Starship heat shield tile. The danger is not that SpaceX has no business. The danger is that SpaceX has a very real business underneath a very speculative superstructure. Starlink is real. Launch is real. NASA contracts are real. Government demand is real. But orbital AI data centers at massive scale, a million satellite infrastructure layer, AI compute in space becoming a giant recurring revenue machine, that is not yet the same kind of real. That is a promise. And markets are extremely bad at pricing promises when the person making them has already landed rockets, built electric cars, and convinced half the internet that Mars is basically a suburban real estate project with worse weather. This is where the retail investor enters the story. Let's call him Dave. Dave does not read the entire filing because Dave has a life, or at least a fantasy football league. Dave sees the headlines: largest IPO ever, SpaceX, AI, Starlink, Mars, Musk, maybe $1.75 trillion, maybe the future of civilization. And Dave thinks, "I missed Tesla, I missed Nvidia, I missed Bitcoin, I am not missing this." That sentence has destroyed more portfolios than bad accounting. Dave is not stupid. He is responding to a very powerful emotional setup. SpaceX feels like one of those companies you are not supposed to question. Because if you question it, people act like you are betting against progress itself. You are not just skeptical of evaluation. You are apparently anti-space, anti-future, anti-humanity, and probably the kind of person who still prints boarding passes. So Dave buys. Institutions buy. Index funds eventually buy. The stock pops. Financial television starts saying things like "new paradigm." And suddenly, everyone is not investing in cash flows. They are investing in destiny. But destiny has expenses. Starship still has to work. And not just work once. It has to work reliably, repeatedly, cheaply, and at a scale that makes today's launch cadence look like a warm-up lap. That is a very different challenge. A test flight can be inspiring. A launch system that supports thousands of missions a year is infrastructure. And infrastructure does not run on vibes. It runs on reliability, regulation, insurance, maintenance, logistics, safety windows, airspace coordination, and boring details that do not fit nicely on a thumbnail. That is why the Starship scrub matters, not because one delay destroys the company. It obviously does not. SpaceX has delays all the time, and delays are normal in hard engineering. But symbolically, it matters. Because in the same week the market was being asked to imagine space-based AI infrastructure, the future was still being interrupted by launchpad hardware. That is the tension. The stock market wants orbital AI. Reality is still asking whether the hydraulic pin retracted. This pattern has happened before. In the early 1970s, investors fell in love with the Nifty 50. These were not garbage companies. They were some of the best companies in America. Coca-Cola, McDonald's, Xerox, Polaroid, Avon. The belief was simple. These companies were so dominant that you only had to make one decision. Buy them, never sell. They were the future. They had brands, growth, profits, and cultural power. And because the companies were great, investors convinced themselves any price was reasonable. That is the mistake. Great company, terrible price, very expensive lesson. When the 1973 to 74 bear market hit, the broader market fell around 50%. Some beloved growth stocks were crushed. Polaroid lost more than 90%. McDonald's fell sharply. Coca-Cola suffered badly. The companies did not all disappear. But investors who paid fantasy prices had to face a very boring truth. The future can be real, and the stock can still be overpriced. That is the part people hate, because it ruins the clean argument. Bears want to say, this is all fake. Bulls want to say, this is the future. But the uncomfortable middle is more dangerous. SpaceX can be extraordinary and overvalued. Starlink can be real and still unable to justify an AI bubble multiple. Starship can eventually succeed and still take longer, cost more, and generate less near-term profit than the market expects. AI infrastructure can become important without every dollar spent today producing magical returns tomorrow. That is not anti-SpaceX. That is just math refusing to wear a cape. So what does this mean for investors watching from the outside? First, separate the company from the story. The company launches rockets, sells connectivity, serves government customers, and builds difficult infrastructure. The story says it may become the operating system of space-based AI. Those are not the same thing. Second, watch where the profits come from. If Starlink is funding the dream, then Starlink subscriber growth, margins, pricing power, and competition matter more than the Mars speeches. Third, follow the capex. When a company spends aggressively, ask whether that spending is building a future cash machine or just feeding a narrative machine. Fourth, respect execution risk. SpaceX has done things people thought were impossible, but doing impossible things does not make every future impossible thing automatic. And fifth, remember that valuation is not a moral judgment. Saying something may be too expensive does not mean the company is bad. It means the price may already include the happy ending, the sequel, the spin-off series, and the theme park. The real question is not whether SpaceX matters. It obviously matters. The real question is whether public investors are being offered a company or being sold a civilization-scale dream at a civilization-scale price, because that is what modern markets do best. They take a powerful company, attach it to a powerful story, add AI, multiply by FOMO, and then act surprised when gravity eventually asks for a meeting. SpaceX may become one of the most important companies in history. It may build the infrastructure that connects Earth, orbit, defense, communications, and artificial intelligence. It may make today's valuation look cheap one day. But right now, the market is being asked to pay for a future that still has to survive engineering, regulation, competition, capital burn, and physics. And physics is famously rude to PowerPoint presentations. So maybe SpaceX is not just a rocket company anymore. Maybe it is the first true space-age AI infrastructure company. Or maybe it is something Wall Street loves even more. A real business with a real future wrapped inside a bubble big enough to reach orbit. Thank you so much for watching. Please comment, like, and subscribe if you like our video. Hope to see you again.